Good day everyone, I'm Charmaine. The topic for today is about PacWest Bancorp. So my group members are Yee Hui, Kim Jian, Poh Chin and Zi Jun. So the contents of today are the introduction, analysis, solutions and conclusions of PacWest Bancorp. To start off, PacWest Bancorp main operation is to provide business banking and treasury management services to small, middle market and venture-backed businesses. The company core business is their subsidiary, which is known as Pacific Western Bank. I'm gonna bring you along to this timeline. So they were founded in 1999, formerly named First Community Bancorp. In 2005, they acquired Glendora for $238 million and expanded to 13 locations and had a growth of $3.1 billion in assets. The following year, it combined two of its own banks, Pacific Western National Bank and First National Bank, and then renamed to the now Pacific Western Bank. In 2008, they renamed from First Community Bancorp, now known as PacWest Bancorp. The July of 2013, PacWest announced the acquisition of the commercial bank Capital Source for $2.29 billion, and in 2015, an $804 million merge with Square One Financial Incorporated, which is the parent company of Durham, North Carolina-based Square One Bank, and 4 years after, in 2019, Capital Source and Square One Bank have been renamed to National Lending and Venture Banking Groups. And this year, their share price had dropped by more than 80%. As you can see in the graph provided, in May 4th, it had the biggest dip with a price of $3.17 due to the news report stating that PacWest is considering selling off parts of the business. That shows customers that they are having liquidity issues. The reason why it had a big decline in March is due to the Silicon Valley case where bank run occurred. Silicon Valley started selling bonds with a significant loss which causes distress to the customers and investors. Within hours of the sale disclosure, the bank collapsed, which affected other banks. The first main cause of the crisis is the economic environment. Due to the slowing economy and surge of interest rate that reduces customer spending and investments, as interest rate has an inverse relationship with aggregate demand. When rate is high, demand is low, and vice versa. Next, the banking sectors are highly competitive due to the abundance of similar sizing banks, as well as financial technology commonly known as fintech. Consumers now prefer faster and higher efficiency rather than the traditional methods, and banks are now adapting and incorporating fintech into their businesses. Credit risk is when the lenders are not able to pay back the borrowers. PacWest liquidity is low, which causes depositors and investors to withdraw their money, which will create an even lower liquidity. Lastly, bank run is one of the depositors' behavior, as people were already panicking due to the fall of PacWest rivals, such as Silicon Valley, Credit Suisse, and First Republic Bank. They acted out of fear of not getting their money back and started lining up outside the bank to withdraw their money. Next, I'll pass on to Yee Hui.
Hi, I'm Yee Hui. As we know that PacWest is a mid-sized bank, compared to other mid-sized banks, PacWest relies more on borrowing from the government to plug its financial holes. After Silicon Valley collapse, PacWest increased its cash holding by 1.9 billion and also has access to 5.3 billion of liquid unpledged security, 4.9 billion of Federal Home Loan Banks borrowing, and 2 billion of Fed discount window availability. This all help the banks confront its liquidity and credit risk. Besides that, investor opinions and confidence in PacWest Bancorp also affected by the quarterly report at 31st March 2023. In the report, it shows that it has 736 million of net unrealized loss on security caused by the increase of interest rates. In the report, also show that the PacWest failed to hit its target set before, as the return on asset didn't reach the 1.5% they aimed, but in a negative number of 11.34%. And we know that the efficiency ratio is the lower the better. They set their goal at 45%, but is higher than they expected, resulted in 58.2%. And these are some members of the executive team of PacWest. Paul Taylor is the president and CEO of the team. Matthew Wagner is the executive chairman. Christopher Black is the EVP, president and CEO of Community Banking Group. Paul Taylor was appointed in July 2022 as the new CEO with a 2.5-year term. Before he is appointed, he is a president and director of Opus Bank from 2019 to 2020. Under his leadership, the bank more emphasized on the core business and exiting a lot of sub-businesses, prioritized the relation-based model, which means they are more focused on the main business that bring the most profit, and reduce services that are not profitable. In their business model, As we can see, they exited the non-core businesses such as premium finance and scaled its multi-family businesses, which consists of 14% of PacWest loans and many branches. PacWest decided to grow on its core community banking, which includes commercial and industrial loans and commercial real estate loans that are relationship-based driven. The lending unit Civics laid off 200 employees, and in May 2023, PacWest sold its unit business operation to Rock 360, except for the extended loans and loan servicing operation. It also sold its $2.7 billion worth of real estate construction to Kennedy Wilson Holdings. Ares Capital also acquired their lender finance loan portfolios at the price of $3.5 billion. After these three transactions are made, the share price of PacWest increase. Lastly, I would like to pass to Kim Jian.
Yep, and I will be presenting the solution. As mentioned above, the banking industry is highly competitive. There are numerous competitors, and if the depositor and borrower are not satisfied with the service they receive, they still have a wide range of alternatives. Hence, to survive or even to stand out among the competitors, PacWest should get to know its existing competitors. It is crucial to understand the service provided by your competitors, especially in such a banking industry which everyone providing similar service. PacWest may evaluate their strengths and weaknesses by using the information gathered from the competitors instead of relying on their own perception. Besides, PacWest could also conduct a perception map, which is an excellent tool for helping PacWest understand how the depositor and borrower view its service in comparison to competitors. Next, a high credit risk situation is fatal in the banking industry, especially for a commercial bank, as its primary source of income is interest on loan. To reduce the credit risk for individuals, PacWest should conduct due diligence and gather the financial information of the borrower before issuing loans to them, such as conducting background checks, review the borrower past performance, and assess the borrower reputation to determine their credibility, financial stability, and likelihood to default. The same method could be applied before issuing loan to businesses. Look at the company financial report from the past 1 to 3 years, observe the sales trend, and this would be helpful in setting an accurate credit limit. Especially the United States economy are not doing well now. The requirement of obtaining loans should be more stringent.
Moreover, to avoid a crisis due to the economic environment, PacWest could take the following proactive measures. First would be risk management. PacWest could form an expertise team to identify and assess the potential adverse economic scenario. Next, having a strong governance framework and internal control system. Be well prepared for any significant changes in the economic environment. And the third measure is diversification. PacWest should diversify the loan portfolio. The loan should be lended to a variety of industry instead of concentrating on specific industry. By implementing these measures, PacWest can strengthen its resilience to unfavorable economic environment and reduce the likelihood of crisis. Furthermore, PacWest should be aware of the depositor behavior, as it has a direct impact on the stability and liquidity of the banks. Firstly, PacWest should build up strong customer loyalty by providing excellent customer service. According to a research, 74% of the customers say that they would give a company second chance for its mistake if they have received an excellent service. Next, PacWest could provide a reward system to the depositor. This would help customers feel appreciated and more willing to have an ongoing relationship with the bank. Lastly, PacWest must constantly improve its service and exceed customer expectations. Next, I will be passing to Poh Chin.
Hi, my name is Tay Poh Chin, and I'll be presenting the potential benefits and risks of each solutions. Firstly, by knowing the existing competitors and the services provided by them can be an effective strategy for extending the lifetime of a business in the market. These solutions could aid us by identifying the market gaps and differentiate the opportunities. This will give the business the ability to create innovative and distinctive services or products that can fill such market gaps, protecting it from competitive markets and encouraging more clients to choose us over competing businesses in the same industry. Moreover, knowing what services other companies offer enables them to decide on their own pricing strategy. The risk is that if the business has identified the market gap and opportunities, it is possible that other businesses will spot the same opportunity as well. This will lead to a crowded market and making it difficult for a business to sustain its competitive advantage. Furthermore, gather the financial information of the borrower before issuing loans to them can be a solution for credit risk. By undergoing these actions, PacWest was assesses the borrower's ability to repay the loan by looking at financial data such as assets, income, liabilities, and credit history. In order to make the loan affordable for the borrower's financial situations and lower the risk of default, PacWest can modify the loan terms based on the borrower's risk profile. However, there is a risk that the financial information provided by the borrower might be incomplete or inaccurate. This may result in an incorrect assessment of the borrower's creditworthiness and ability to repay. Besides, the borrower's credit risk may not be completely depicted by financial data alone. Other than that, risk management could solve the crisis due to economic environment. A strong governance framework and internal control systems are essentials as organizations can ensure compliance with laws, rules, and industry standards. This helps prevent penalties, fines, reputational harm, and possible business interruptions. Greater economic stability might be a result of diversification's capacity to reduce dependency on particular industries or sectors. A thorough awareness of the operations industry and external elements of the organizations is necessary for risk management. If any of the risks are being underestimated or overlooked, it could lead to negative consequences and insufficient risk strategies. Lastly, building up a strong customer loyalty by providing excellent customer service is important. A great customer experience is produced by offering top-notch customer service, increasing the possibility that customers will come back to deal with your company again. A well-designed and appealing reward program sets the institutions apart from its competitors, encouraging new deposits while maintaining existing ones. However, providing good customer service can be time-consuming. Massive expenditure in training, technology, and employee engagement may be necessary. The implementations of a reward system may result in a decrease in profitability. If the reward supplies are not sustainable or fail to motivate the intended customer behavior, the economic effect on the business could be negative. That's all from me. Next, I'll pass to Adrian.
Hi, I'm Quek Zi Jun, and I'll be summarizing the key points that my teammates have came up with in this conclusion. So as a result of recent challenges, PacWest Bancorp's financial performance and investors' confidence have been negatively impacted. This problem has been significantly influenced by the difficult economic climate, which includes rising interest rates and a slow economy. The failure of other banks such as the Silicon Valley Bank has further increased depositors' and investors' anxieties. PacWest Bancorp must take initiative if it is to overcome these difficulties and achieve stability. First and foremost, it's important to fully understand their competitors' situation. To stand out from the competition, PacWest should study and evaluate the services offered by other banks. This will enable them to provide clients with unique and new goods and services. PacWest will be better equipped to establish fair rates for their products and remain competitive, while also at the same time making a profit if they are aware of what the rivals have to offer. Moving on, PacWest should emphasize reducing its credit risk. Prior to giving out loans, it is essential to do in-depth research and obtain comprehensive financial data on potential borrowers. As a result, PacWest will be better enabled to evaluate their creditworthiness and decide on the terms and circumstances of loans. It is significant to remember that financial data may not always provide a comprehensive picture, thus PacWest should take other aspects into account when assessing the credit risk of potential borrowers. In response to the challenging economic environment, PacWest must take proactive measures to manage risk. This involves hiring dedicated employees that can recognize possible economic obstacles and being ready for any substantial changes. Transparency and accountability, which are crucial for preserving investors' trust, will be promoted by strengthening governance framework and internal control mechanisms. Another essential measurement for PacWest sustainability is diversifying the loan portfolio. If one industry has a downturn, the bank may be at risk if it concentrates its loans there. PacWest can minimize the effect of industry-specific difficulties and lessen its vulnerability to economic swings by dispersing loans across several different industries. The entire financial stability of the bank will then be protected by this strategy. Finally, PacWest needs to also put its depositors' pleasure first. It's crucial to achieve strong client loyalty through outstanding customer services. In conclusion, PacWest Bancorp is coping with economic difficulties while navigating through a competitive banking environment. PacWest can overcome these challenges and restore investors' trust by comprehending the competition, reducing credit risk, managing risk skillfully, diversifying the loan portfolio, and placing a high priority on customer happiness. Although it won't be simple, PacWest has the chance to become a stronger and more resilient participant in the banking sector by concentrating on these important areas. Thank you.